Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald. Now, the Swiss banking industry is facing increasing pressures. Here to discuss this a little bit further is Kohn of Barron's Financial Services. Eric, thank you so much for coming in today. Now, Switzerland's banks last week took the unprecedented action, really, of apologising for their role in what they claim is assisting tax cheats. In your view, is this action wholly necessary? How much can Swiss banking institutes really be held responsible for the actions of their clients?
Well, it really depends on the management. At the end of the day, if I use the analogy of aircraft certification, you want an aircraft to be able to fly in different countries, and you have to get the approval of various different countries' authorities, and you don't want to break the laws in different countries. I think what the Swiss banking industry made a big mistake is when it expanded out of Switzerland and wanted to become a global player, it allowed itself to do things which transgressed the law of the country they were in, especially the United States. And the interesting thing is the boards were not held responsible for that. And I think that was a big mistake that they made. They wouldn't do it in Switzerland. They'd stick to Swiss law in Switzerland. So you can't go to a foreign country and breach their law. And I think in the United States it was taken to an extreme level, because they wanted to grow as global universal banks, and they attracted customers, and there is always a narrow line, and they transgressed the narrow line, and that is their difficulty.
You touched then on the US. Why are they pushing for this so hard, for these reforms so much?
Well, the US has a very clear law about declaring your taxes, and what you're allowed to do is avoidance legally, and what you can do, what is evasion, and that's a criminal offence. And in the US, there's one big difference to most other countries. A US citizen is a taxpayer for life. That's why so many people are handing back passports. And what you don't do is go in, if you're either a US bank or a Swiss bank, it doesn't matter, but operating in the US, you don't go and break the law. And I don't think it's a question, it's not a law that's new, it's been there forever. Probably the fundamental difference is that before 20 or 30 years ago, the Swiss banks were not in America in the way they are. They didn't want to grow in America, and therefore this was less of a problem.
Talk us through the changing landscape of the sector then. How are institutes looking to respond to the increasing pressures being placed on the system?
Well, I think that all banks and fund managers now in Switzerland have to be performance orientated. The days of the past were retaining capital by clients who had untaxed or taxed money, usually untaxed money, with banks or fund managers have gone, because now the money has to be taxed, because banks won't take untaxed money, and they're going to have to perform as anyone in London or in Australia or in the United States or Canada does, and be able to give a good return to the client. And I think it will depend on client service. Confidentiality will also be important, but it's now slightly different because it's not confidentiality in respect of tax, but it's all about the performance. If you can get 10% with a conservative management per year return in the UK, and you only get 5% in Switzerland, then you won't put your money in Switzerland. So they're going to have to compete on the global market on fund management, and that will put quite a lot of strain on the fund managers within and without the banks, because that's what the client wants.
You mentioned there about people, potentially not putting their money into Switzerland anymore, but what about taking it out? Are we beginning to see a mass exodus of client holdings in Switzerland, or is Switzerland's banking history, reputation going to prevail over this?
I think the one thing that Switzerland has is a trust of a lot of people in emerging countries or in the second, third world, where they see Swiss banks as safe. The banking crisis affected practically all banks, but a lot of the Swiss banks weren't private banks were not affected by it because they're very risk averse. But that will be balanced with the return. And you can't just live on being a safe haven, forget taxes. You now have to actually perform. And it's different if the money is black or not taxed and you get a zero return. Now it's going to be taxed money. At least you have to pay the taxes and you have to have some return. So I think there won't be an exodus in a huge numbers, but it will now be performance orientated, and it'll be like choosing which airline you fly with, who gives you the best price, or any other service. It'll be about the best return.
Eric, thank you very much for sharing your views with us today. That's
a real pleasure. Thank you for inviting me.
A hot topic there, which we will be returning back to. Thanks very much for watching. Goodbye for now.